Welcome back to the best prop for you trading flow. Today we're breaking down the S&P 500. Let's hit the macro first and fast. The dollar has been dragged lower for 7 straight sessions now. Hopes for a US-Iran ceasefire are rising, and US PPI inflation data came in below forecast today. Even with mixed bank earnings, deals like the BlackRock American Airlines merger proposal and Novartis partnering with OpenAI have pushed equities flying. Not Novartis, excuse me, Novo Nordisk. That is the noise, of course. You know the tensions between US and Iran. There was ceasefire talks, then got cancelled. Then Trump threatened to close the Hormuz himself. But now he says that Iran is willing to talk again. Either way, that looks like another taco trade for me. So let's look at the chart because we have a technical setup forming soon, I think. Look at the daily. This is a textbook, in my mind at least, V-shaped recovery. Can you call it a pattern? Yes, you can call it a pattern. From the lows of 6,030 back on March 30, we have a 10% rise over the following, what is it, like 12 sessions, okay? Just one red candle. So price made a complete full rotation from outside the lower end of the ends of the lower band, and it's now flirting with breaking the upper band while both bands are expanding. What is most important here for the macro trend is despite this 10% flash higher, the daily RSI hasn't yet hit the overbought level at 70, which suggests that there is a longer term sort of momentum is still positive, and there is some fuel to extend to new record highs above the 7,000 level. But why I say this, I say this with a caveat. We don't buy the top of a 12-day run. Okay, that's the point. So if we do see an extension to that high at 7K, that would be the opportunity to perhaps go on a short position. Now, I'm going to draw, as always, a resistance level, which I see as a liquidity grab. You've got probably one in between over here around 6,940, looks like the one, and head lower down to the 4-hour chart. Here, of course, we have more warnings on the RSI with consecutive signals, but also resets. 1, 2, 3 resets, and then off we go up to overbought territory again. But on the RSI momentum, and also that is just one indicator, we do see the Bollinger Bands contracting, breaking to the upside, contracting, breaking to the upside, and now we see another contraction that seems to suggest that another potential breakout to the upside towards 6,950 is probable. But is it going to be the one that prices are going to get rejected and we see another leg down to 6,720 or so over here, perhaps even a bigger retracement, or is it not? Now over here, of course, the standard Fibonacci doesn't work because we are deep into the close to the full reversal from the record high. So what we're going to do, we're going to use a Fibonacci extension. There is two ways to do this. One is use waves 1 and 2, which is over here. Look at the 161.8 extension and look at this cluster. Comes exactly at 6,950. And that is for the third wave supposedly, but we don't really need to have a third wave here. We are impulsive, that's what matters. But we also can use, and I typically do the net distance between waves 1 and 4, which in my 8 wave experience, this is 1 and 2 and 3 and 4, or perhaps 3 and 4, is irrelevant. What is more relevant is that we are in the fifth wave now. And look at this, the 38.2 extension also comes pretty much at the same level, 6,930, 950, which is very close to current prices. The 4 hour as well, in this particular case, okay, also looks at contractions and expansions, okay, in this particular, not plural, singular. So combined with the being on a fifth wave, having an RSI that is in overbought territory, and we have a very strong structural resistance, momentum slowing down means like we could see a potential correction. Okay, so that is the idea here. We are looking here to trade against the trend, but we're looking at a potential terminal wave for the medium term, if that makes sense. So let's go and check the 1 hour. The 1 hour is, of course, consecutive contractions and expansions in Bollinger Bands. Okay, we don't really see anything more than that. But what is important to see here is that we have a double bottom, okay, in this particular territory. And since we did have a double bottom, you know what this typically means. It means that if we were to do the 100% measured move projection from one to the other, then we also come at 6,950. So the 1 hour gives us a little bit more context and an extra confirmation that, again, there is yet another point that sees a potential ceiling around that territory. So here is the play for best prop for you traders. We are ultimately bullish, but we expect a short-term correction in the next few sections. We're looking for a final push up to the liquidity grab, 6,950 or so, or around that territory. And then what we're going to do, we're going to be looking for a potential short position. Now, do we have to go there? We don't. But I think for the validity of this potential trade to the downside, we want prices to get to that liquidity grab to trigger a broader sell-off. Okay, so once the liquidity is grabbed, we expect a correction down to 6,740 or so. Okay, let's keep it to 50. That level is a real load zone. Okay, so once we get down here, we would be looking, we start looking for potential to go back to the upside, to turn it, to reverse that trade again to the upside. Okay, from there we look for a higher move to the upside, pushing through previous highs, targeting the 61.8 extension above the 7K, and of course reaching record highs. Of course, this is just an assumption. We don't really need to go that way, but this is just what we expect to see. So you can wait for the liquidity crop and short, and then wait for the extension down to that level if it comes, and go long. And obviously all of these with upcoming and short-term signals confirming, always confirming the trading plan. So I'll see you in the next breakdown.